Hi guys, this is Terry with Futures.io. It is my honor to welcome back FuturesTrader71 for part 3 of his multi-webinar educational series. Today's webinar is titled Trading Habits, What Your Trading is Made of. If you have questions, you can type them into the questions box and we'll do our best to answer them at the end of the event. There will also be a book giveaway after the Q&A, so pay attention, take some notes, and see if you can answer the 5 questions presented by FT71. We will be giving away 5 copies of Peak by Anders Ericsson, the original researcher behind the 10,000 hour rule. If you're watching this on YouTube, please do us a favor and give us a thumbs up if you enjoy the webinar. Also, please feel free to share, comment, and subscribe to our channel. It really helps us a lot. Don't forget that you can also follow us on Twitter at Futures.io. Without further delay, I'll hand it over to FT71.
Thanks, Terry. All right, here we go. Rock and roll. So we should be seeing the title slide here. As Terry said, my online name is FuturesTrader71. My name is Morad Asghar. Just a quick background, just to start with, to establish who I am in case you don't know who I am. I'm sure most of you don't. I'm a futures trader based out of Chicago. I started out as a SOS trader, a NASDAQ trader, mostly scalper, and I moved into futures back in 2002. I've been trading futures since. I day trade. I do not hold positions or scalp, but what brings me here and I believe qualifies me to speak about the subject is the fact that I started a prop shop a while back and started backing traders. First, I would support traders or help support traders who are coming off the pit and so on. And then later, when I did my own prop shop, I decided that I would take on those who have absolutely no clue what the market is and to build them from scratch. And so with that experience, there's been a lot of exposure to what most people struggle with, including what this mini-series is built on. This mini-series, the topics and the order of the topics was based off of a survey that was sent out to Twitter followers. Those who don't follow me on Twitter, you might want to do so at twitter.com/FuturesTrader71. And through that Twitter survey poll, we found out that trading techniques was the top topic that is in demand, followed by the trading mindset issues with how you think of yourself and trading in the markets, which was the last topic. And then today's topic is about trading habits. And this one is packed full of information, I believe. And if you just hang in there and listen carefully, I think you'll pick up a thing or two from it. This is core information to the way I would take a trader from not knowing what a contract is or a share is to potentially completing their prop contract successfully. So let's start here. Again, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. What I share with you here is my opinion and my experience alone. It's not a reflection of Futures.io and my sponsor, which is Stage 5 Trading. Here's what we will cover. The first topic, some of all of your habits, what makes up a habit, why are habits relevant to you, how many hours make you an expert, Keystone Habits, what are they for traders, let's change some habits, emotions, the puppet master, and this applies to all traders. You all ready? So the sum of all of your habits. There are many sayings, classic cliche type sayings that start with you are the sum of your fears and so on. But the fact is, when we look at how you live and what makes you tick, this is built on your day in, day out actions, and most of those actions are not conscious. These are habits. You might be someone who bites his or her nails. You might be someone who wiggles their leg under the desk. You might be someone who smokes under certain circumstances. You might respond to stress by eating more or not eating or drinking or whatever. These are all habits. These are things that we do that form who we are currently or temporarily, if we so choose. And they're it's very, very important to understand that you as a trader are also made up of a sum of all your habits. I can assess based on your non-trading behavior what I might expect in your trading outcome if I had to put up risk capital and back you. The issue of the sum of our habits arises from the contradictions that we insert in between good habits. So when you ask someone what their habits are, they generally list all their good habits and some menial habits, but they don't actually outline the habits that are somewhat automated and are caused by emotion. We're going to talk about that a little bit. As a trader, what you choose those habits to be governs a great deal of the outcome of your effort. So a lot of times I run into a lot of traders who do all the work, but somehow there's this thing, this underlying current of self-sabotage or the inability to follow through with what was said, and a lot of that has to do with how we respond to certain cues. A simple example of this, a typical struggling trader's process. Now, being the risk manager and the trader development manager at Stage 5, I get to see what everybody's doing on their trading, also in our chat forum, and so on. There's a lot of conversation. We do trader interventions and things like that, and we get to see how people respond. And believe it or not, most people struggle with the same exact issues, the same demons, so to speak. And this is a typical process. You listen to everyone you perceive as an expert. You're listening to me, and you try to gather ideas. Some of these ideas are just newly gained knowledge. You get excited about them. You put together a plan. Generally, people don't bother to test those ideas and check them to make sure that that's what works in their time frame and so on. And I talk a lot about time frames in the first part of the series about trading techniques. So they get excited the next day, they start trading. And because there isn't a habit loop to support it, something goes wrong eventually, because something does go wrong all the time, because we cannot predict. The market is not here to fulfill exactly what we want. So there's a point in the day, there's generally a point in the day for pretty much everybody where things don't go just as we want them. So something goes wrong, all of a sudden you go on tilt or you lose your mind a little bit and find yourself in the exact same spot as before, fighting the market, throwing out that nice big plan that you made the night before that you got excited about, and then you go and look for another expert to listen to, another solution, another way to trade, and then you get excited about it, and you go out in the market, and it just works for a day, then it doesn't work, and then you do some random thing, and then you repeat. That's a typical habit loop for a learning trader. A key thing to remember here, if you don't like the outcome of your current effort, and this is true for all aspects of life, right? If you don't like the outcome of the current effort, then you must change some aspect of it. I think it was Einstein who said, if you don't like the outcome yet you keep doing the same thing, that's the definition of insanity, something like that. But the same happens in trading. Coming in and repeatedly doing the same thing over and over, kind of mindlessly going through the day and hoping through some process of osmosis, or the market might change enough to pay you finally, or whatever, is not the way to approach this. You have to change something, and the change comes in the form of habits, and that's why this topic, although it may seem not that exciting, is really, really important. Coming into the markets every day, repeating the same errors, the same biases, the same emotionally driven actions, and expecting improvements is a waste of your time. I know it's blunt, but it is the truth. The biggest resource you have as a human being is time. It's not your money, it's not whatever, it's time. It's unrecoverable. What makes up a habit? So just so we define what a habit is, according to Charles Duhigg, the writer of The Power of Habit. A habit's made up of three components. The cue, this is the trigger. This is the thing that takes place whether you're aware of it or not. A lot of times as humans we're not aware of what that trigger is, whether conscious or unconscious. That starts the action. For example, the market gives you a loss. You start the trading day, you take a loss. The routine is the action we take once that cue is triggered. And it's the result of that trigger, of the cue. You begin to look for any evidence of a trade in an effort to make your dollars back. In other words, you throw your plan out of the window and you're simply looking for that quick, $50 winner, or 1 point winner, or 10 tick winner, or whatever it takes to make that money back. You're not trading off of a plan anymore. You're trading your profit and loss line on your platform. The reward is the outcome you consciously or unconsciously seek from the routine. So once you've done the routine, the reward is something you're looking for. You're looking for something to happen out of this this mess that you got yourself in. In this case, you may feel like you fought back even though you lost more. Yeah, well, I showed them. At least I didn't take it laying down. At least I fought back, and thereby making that initial loss much worse and potentially increasing my costs by churning and over trading for the day. That's a habit loop. What are habits? Why are habits relevant? Talked about that a little bit. Let's start again, and I know I've covered this quite a few times when I'm talking about to the audience here at Futures.io. The stages of consciousness, these are important. Understanding what stage of consciousness you're in, and there are a lot of resources that talk about competence in the stages, and where you fit in helps you figure out what you need to focus on. Habits are key to what leads to progression in your level of expertise. In other words, not only the habits simply move you from one stage of consciousness to the next, whether it's a higher stage of consciousness or lower, it's up to you. But knowing where you stand, where you are in the stages of consciousness is very important, and you use habits and some other things we're going to talk about to propel yourself ahead from one stage to the next, from being someone who has no clue what they're in for when they come into trading to someone who's trading unconsciously. Stage one is unconscious incompetence. This is when you don't know what you don't know. You have no clue what dangers there are in the market, what things you need to focus on. You have some idea, you might have watched someone trade, but you think you know more than you actually do. Conscious incompetence, you're now aware that you're incompetent in what you're pursuing here, and so there's a deliberate effort to get educated, to soak up as much knowledge as possible in an effort to improve your level of expertise or your level of consciousness. Stage 3 is conscious competence. Stage 2, you accumulate a lot of knowledge, you gather a lot of information. Stage 3 is a process of getting rid of a lot of that stuff and narrowing it down to what matters to you, and then practicing that in a very conscious way, like you're coming in and you're focusing on every single step that it takes to turn a consistently losing streak or an inconsistent streak in trading to something that is more consistent. The stage we're all seeking to be a part of, and it's the expert stage or mastery, is stage 4. It's called unconscious competence. In other words, you're not even thinking about what you need to do. It just happens. And this is the pinnacle point of habits. When your habits are really refined and are relegated to something you don't think about and don't have to force yourself to do, what takes over is your subconscious mind, and that is stage 4. Okay, so this is what we're going for here. We're looking to just think of a skill, the one that I like to think of that most of us go through. I mean, how many of you here don't drive? To learn to drive, the first time you got in, every dial and the way you held the steering wheel and the way you fixed the mirror and the way you watched the front of the car as you drove and the way you carefully steered and accelerated and hit the brakes, that's stage 2. Stage 1 is when you're a kid and you sat in your parents' lap and thought all you needed to do to drive is to just hold the steering wheel and wiggle it like they do, and that's what driving is. That's stage 1. Stage 2 is knowing that, oh my God, something can go wrong here. I have to be very careful. Stage 3 is when you have to deliberately remind yourself to check the mirror, to check your side mirrors, to check your speed, to make sure you know what your surroundings are like, and you're constantly focused. You see that with 16-year-olds here in the U.S. Or someone who's only been driving for a month or two. They're very consciously competent. They know how to drive, they've got the skill set, but they're very aware of every step they make. Stage 4 is when you get in the car, do all of that without even thinking about it while you're eating a sandwich and are having a phone conversation. That's stage 4. Much of the skill of driving or preparing to drive or getting to work or getting to your destination is not something you think about. Now, imagine that for trading. This is essentially expertise. This is what expertise is. This is where we're looking to head towards through our day-to-day practice. Trader growth through habit loops. So your process as a trader in general, you think you know enough, you figure out what you don't know, you experiment, fail, try again, you keep doing that. Sometimes that happens for years. Discover things that make sense and work sometimes. And then you create a habit loop eventually, and I'm hoping with this talk here I can get more people to think about their habits, to really focus on them. The book that I recommended, Peak, addresses a lot of these processes. Create a habit loop out of what works and be disciplined about following it. This is going into stage 3. You're smack dab in stage 3, and then continue to reduce your errors and improve your discipline to the point that it becomes something you don't even think about. The unconscious trader, spoiler alert, I already told you the answer here. Your goal as a trader is to become unconscious with your trading skills. The power is in your subconscious. You come to, I was in a prop shop that had about 60 traders or something when I first started trading, and you go in there, and if you ask anyone that's making money the question, why did you buy that? How come you got long when your signal didn't kick in? Why is it that you did this or that? They might give you an answer, but frankly, they're struggling to figure out why that is. They just know that it was the right thing to do. And that's a very hard thing to describe to someone who's new. When I sit a new trader next to me as part of their training process and we go through the market, I struggle sometimes to answer why I did what I did, but I know that it's right because I have the cues that it's the correct action. And that's really what you're seeking. You're seeking to get to know the subject matter, which is trading in this case, so well that it is a subconscious process. It doesn't mean that you're sleeping on the job. Subconscious doesn't mean that you just don't care. It just means that you're not thinking about every little thing that has to take place. You're not worried that you're not going to take your stop when it's time to take a stop. Instead of looking at the parts of your trading skills, you have to look at representations or visualizations. This is discussed heavily in this book, Peak, that FuturesIO is giving away today. Representations are, and in the book he uses, and I just recently read it, he uses chess masters, the type of people who are blindfolded, have their back turned to people they're playing against across 26 chessboards. They're playing against 26 different experts in chess, and they can remember every move that is happening on every board. How do they do that? They don't do that by thinking about every single little part. They do it by looking at the full picture. They're just constantly aware of the full representation of what's going on. And that's something that's very, very difficult to describe when you're teaching someone. How many hours make you an expert? Can anybody guess? How many hours does it take to become an expert at something? You can answer in the chat window in front of you. 10,000, 10,000, 10,000, 20, 10,200, 10,000, it depends. 10,000, 10,000, perfect practice. There's no set amount. Good. Depends on how you practice, as many as it takes. Okay. So a lot of good answers there, but 10,000 hours, the 10,000 hour rule. Malcolm Gladwell introduced this idea in his book Outliers in 2008. And he discussed how the Beatles practiced in Hamburg, and it took them approximately 10,000 hours of playing to the public to become the experts that they are. And he also talks about Bill Gates sneaking into the computer lab at his local university and coding all night, and all of those nights added up to 10,000 hours, and then all of a sudden he became an expert, started Microsoft, and became, you know, a billionaire. And others, there are others that he mentions, that Gladwell mentions in his book. So it took 10,000 hours of doing something to become a master at that thing. And this information that Gladwell used was distilled from research that was done by Anders Ericsson, the writer of the book Peak. And what happened was he distilled it incorrectly. So Ericsson's view is the number of hours of regular practice to mastery is infinite. It's infinite. If you come in and just follow the same routine and stare at your screen and don't have a deliberate kind of goal to achieve, the time it takes to become a master is infinite. There's no telling what that could take. It just depends on the skill. However, with the 10,000 hour rule, people started to think that it is all I have to do. Either all I have to do is spend 10,000 hours doing the same thing, and then I become an expert, or if it takes 10,000 hours, I'm not going to do it. Okay. According to Ericsson, the expert in human performance science, this rule is false and is also dangerous. Why? Let's jump into Keystone Habits real quick, but the reason why is if you practice doing something wrong for 10,000 hours, you're just doing something wrong for 10,000 hours. If you're practicing the same thing for 10,000 hours, you're just practicing that thing for 10,000 hours. There's a huge difference. And we'll talk about that in a minute, and I think many of you know what I'm getting to here. But for a moment, let's talk about Keystone Habits. Keystone Habits, what are they for? Traders. A Keystone Habit is a habit that you take on, and it generally causes a chain reaction in other areas of your life or trading, which have a positive long-term effect on who you are. Okay, so an example of Keystone Habits, these are common, not just for traders. Making your bed every morning is a Keystone Habit. It starts you off on a path towards just being diligent about everything else that follows. Exercising consistently is a Keystone Habit. Can somebody tell me why exercising is a Keystone Habit? How does it fit the description? A habit which causes a chain reaction in other areas of your life for a better long-term effect. How does exercising consistently count as a Keystone Habit? Healthy mind and a healthy body. You have more energy, muscle memory, discipline. True, those are benefits of exercising, but it's a Keystone Habit, and this is why I made this example as a specific distinction. It's a Keystone Habit because generally you don't go and work out and then immediately go to the donut shop and eat a dozen donuts and drink, 6 lattes, right? So it's a Keystone Habit because if you exercise, you generally will eat better. You'll generally sleep longer and earlier. It generally results in other positive new habits. It's not planned that you will do that, but because exercising is a Keystone Habit, it starts you off on a path of improving other areas even without you knowing it. The same with making your bed. For example, if you get up and you make your bed, chances are you don't get up, make your bed, and then the rest of your room is a huge mess. Generally, it causes you to want to be orderly and organized don't tell that to my teenage daughter, but it causes you to be orderly and organized in other areas of your life. And this is why it's a keystone habit. Immediately getting up when you wake up in the morning, that's a keystone habit. When the alarm rings or it's time for you to naturally get up, you don't just lay in bed, grab your phone, and just lay there for a half hour and becoming lethargic. You jump out of bed, and if you're jumping out of bed, then generally you're jumping into the next habit, the next habit, and the next habit, and that's a good way to start the day. It's a more positive way to start the day overall. Doing the exact routine every morning, such as making coffee and drinking coffee, or going for a walk in the morning, or reading the paper, these are also keystone habits according to Duhigg, because they trigger other parts of your day that are routine-based and generally positive. If you change it every day, then generally your day is chaotic. There's no structure to it. And then finally, meditating. Meditation is extremely powerful, and I'll talk about it again in a second, as a habit, because it really sets everything in place for the day, but also has the additional benefit of making you much more capable of long-term focus, which is really important for trading, making you handle your emotions and be aware of your emotions much more keenly, and things like that. So meditating is definitely a key habit for me. Keystone habits for myself and traders that I've backed: meditate every morning. This, just like I talked about, it is key. It completely changes the way your mind works. It's proven scientifically that it does. Exercise, or at least walk for a short distance, even taking a bike ride to work. If you trade from home, just get out if you can and just walk around the block, even if it's for 5 minutes. Just do it, and you'll see that it starts to influence other areas in your life as a keystone habit. Follow the same prep routine every day. Review your entries from yesterday or the prior session. Review the markets macro to micro. Look at the big picture. And these are habits that set off how you trade for the rest of the day. Review the news events, prepare the day, have your plan, and then, of course, shut everyone else out at the start of the day so you can focus internally on what you're practicing for the day. It cannot be influenced by what other people think of what the market is doing. Let's change some habits. So the 3 R's of habit change. One of the things I'd like you to pick up is these 3 cues to habit change. The first one is a reminder. So you want to change a certain practice or a certain thing that you do. You need to become conscious of the fact that there is a cue that sets things in motion. You can use alarms for this, alerts, checklists, to remind yourself to take a break every so often. That becomes a habit. So the reminder part is really important to changing that habit. If you really want to exercise but you just feel like it's something you don't want to start, maybe you're lazy, maybe you feel like it's hard, it's easy. You can take an easy first step. Just set it up so that you're just simply, the routine in this case would be take the first smallest identifiable step. So first, remind yourself that you need to do this, set a time for it, and then take the smallest step you can possibly take. If you're starting an exercise regimen, it doesn't mean that you should be able to run, a half marathon. Just run around the block, run down and up your driveway, run around your house. That's just a start. This is, put your sneakers on. That's what my coach used to say. You can just start by putting your sneakers on. You'll feel darn stupid if you put your sneakers on and you don't go exercise and you have to take them off again. So that's a small routine. That's a small first step in changing your habits. The reward, keep yourself focused on a benefit. What is the benefit you seek from reminding yourself and following this routine? Again, these things sound like I'm a psychologist. I'm not a PhD in psychology or anything, and they sound very generic, not trading based, but I'm going to assure you here, based on experience and not some journal that I read, that you have to start. You have to look at these things, and you have to start your trading journey in the best light possible, and your habits are a key part of that. And as you become more and more and more of an expert, you'll start to recognize how important that is. For example, those people who are swinging, 100 lots in the bonds and so on, they're generally very routine-based. They have a certain process that cannot be interrupted. They don't like it to be interrupted. It is their habit loop. And you'll see this in prop shops. You'll see guys who just don't want to be talked to at a certain time, or they follow the same pattern, or they eat the same breakfast, or the same lunch, or do the same thing, or take the exact same break at the same time. These are all habit loops, and that's really what I'm trying to convey to you. Are you really practicing? This is where the deliberate practice part comes in. Trading is a performance sport. There's no two ways about it. When you trade, you are competing. You are competing. It is a negative sum game, but I don't have to look at any one of you as a trader and feel threatened by the fact that I'm competing with you, because my income and my revenue comes from a change in value between long-term traders and short-term traders, and I'm a short-term trader, so I don't feel like I have to beat you up in order to make money. But it is competitive. It is a high-performance sport. It requires a tremendous amount of discipline and concentration and commitment. Given that it's a high-performance, high-performance participants don't just practice, they practice deliberately. This is the difference. So deliberate practice plus a strong habit loop is the path to mastery. Those who get the book, who win the book today or go out and get it, this is the driving force behind the book. And this is the truth. If you're doing the same thing and that thing is not providing the outcome you want, for example, you come in every day and you move your stop. You get in a trade that you planned. Your stop is supposed to be, let's say it's in the S&P minis, and your stop is supposed to be at 3 points, and then the market fills your order, and then it starts to go against you, and it starts to go for you, and you just cannot stop yourself from moving your stop to break even as soon as the market starts moving in your direction. And then 9 times out of 10 or 8 times out of 10, it ends up coming back and stopping you out of break even, thereby taking away your potential for profit, versus someone who's supposed to sit through and wait and follow their plan that they've already figured out. A lot of people, you'll be shocked at how many people are unable to or are unsuccessful at just letting their plan work. No matter what they do, they just come in and there's some strong force within them that makes them reach for the mouse and just take that 1-tick winner or 4-tick winner, and then inevitably, more often than not, they see the market retrace, fill their stop, and then go to their target, and that's the cue. That becomes their cue to start now trading against that idea. I didn't catch the long, the market's trading up like it did today, so I'm just going to short it and lose, short it and lose, short it and lose, short it and lose. That's a habit. And the cue, so your job is to stop for a moment and note that down. This was a trade that was an error. I changed my trade management scheme. This is an error. Identify that error, document it. It's so important, because if you don't document it, your mind plays tricks on you and you'll forget how often that happens. If you document it, you'll see how pervasive it is in your trading performance, and then your deliberate practice becomes to just not touch your stop. And you can't just say, today I'm not going to touch my stop once I get in. You have to have a plan, and your plan is to change something, to create a different cue. You've entered, now you're going to minimize your charts, or you're going to turn off your monitors once you put in your stop order and your target. You're going to turn off your monitor and you're going to walk away. That breaks that habit loop, that poor habit loop, and instills some positive potentially positive habit loop in its place. You have to go through those drastic measures to adjust your behavior. And that's what this is about. Deliberate practice is about creating those interruptions. You have to disrupt the process, and that's what. And in disrupting the process, you have to be very focused about what it is exactly you're going to do in order to disrupt it. Reducing errors is a huge one. Early on, as I was backing guys, I started to recognize that when we would review at the end of the day what they did, there's so much talk of, yeah, and then I did this, and then I decided to get short instead of getting long, and that cost me, and the conversation went like, well, you shouldn't have done that, you need to stick to your plan, let's do a better job tomorrow, and everybody goes home, and then we have that same conversation again. So I imposed a requirement to track errors, and then when we track errors, then we can quantify what those trades cost. We can go back and look at what those trades cost, and it's extraordinary how much errors cost. So our deliberate practice becomes, and I didn't even know it was called deliberate practice because it predated the literature that's out there now about it. Our focus became to minimize errors. This, on a regular basis, Joe makes 4 errors a day, or 2 errors a day. Our goal this week is to cut that down to 1 error a day, and to focus on not committing that error, whether it's the fear of missing out, a technical error where they got short when they should have gotten long, they didn't take a trade where they are intending to, they moved their stops, therefore they micromanaged the trade. That sort of stuff gets recorded, and once you record it and assign a tick value to it, you'll be astounded at what those things cost. What it is going to take to trade. So I'm going to go through a 10-step process, and you might want to just watch this again in the recording once FuturesIO puts it out. A 10-step process that really is a distilled version of my training manual, and essentially the bigger chunks of effort that have to be made by a trader who is struggling and is looking for consistency. Here's the process I've experienced for successfully turning a trader. First step, get through stage 1 and 2. That's the unconscious incompetence, all the errors, all the stupid stuff that we all do when we're doing something new, a lot of mistakes. We get through that as quickly as possible. How do you get through it as quickly as possible? You commit your mistakes, you don't dwell on it, you note it, and you move on, and your effort is to just be aware that this exists, that these traps exist. There's not much you can do to accelerate step 1. What it is going to take to trade. Step 2, get into a strong positive habit loop through good Keystone Habits. This is really important. Start doing something that you know you need to do that's going to make you feel better about yourself. In other words, your focus at this stage is to just make a better person of yourself, whether you succeed in trading or not. This is the thing you get to take with you if you don't succeed, and it doesn't matter. It becomes, once you master this, it becomes unimportant how you do in the end, because you know you've triggered off a good habit loop, and now you're on your way to becoming just a better person. In other words, you're giving it 150%. The third step, be strict about documenting your performance and progress, just like I talked about. Most folks just want to trade. It's kind of like a video game thing, or they get they get a high off of it. They've done something. They got to interact with the market. They took a risk today, and then the day ends, and then they shut off their machine and leave. Well, if you're a basketball player and you're looking to become a professional, and you happen to be playing anywhere near someone like Kobe Bryant, you'll notice that he doesn't just leave at the end of practice, that he sticks around, that he continues to practice some aspect that he wants to improve. In our case, We don't just continue trading, we document it. We sit down and say, this is what I expected. I do this in my Trader Bites every morning at 9 a.m. Eastern. We go through what we expected yesterday versus what the market gave us, and then we start to look at how yesterday's impact is on today. Then we come up with a plan for today, and that's basically the Trader Bite. I call those hypotheses or hypos. You're documenting everything that you're doing, and if you're eliminating errors and so on, you have to document even more. I know it's something that everybody hates. It's really difficult to get prop traders to do it, but it's a necessary part of the process. This is something that maybe, if you're a professional athlete, they'll hire someone to keep track of your statistics and how you're doing and to work on your weaknesses. You are your own coach when it comes to this. Fourth step, identify your errors, your weaknesses, and areas of improvement. You need to know where you're weak. I know my weaknesses when it comes to trading. I know what kind of days cost me money. I know what kind of days I need to chill out and not push the positions. In fact, those kinds of days have happened over the last 3 weeks. I don't stress about it anymore. I just know that I know these are weak days when the market's just continuously rising or is chopping and has very, very small range bars. It's just not something I participate in, and so I get to save a lot of money. I'm not making a lot of money, but I get to save a lot of money. Identify your errors, weaknesses, and areas of improvement. Now, the next step is to set goals and plan for improving those areas. This is the deliberate practice portion of the process. This is like in Ericsson's book, he talks about the violin player who is unable to play a full, a full sheet without committing errors, and so she has to keep practicing that same sheet over and over with the deliberate idea of eliminating as many errors as she can, or maybe there's a part of the song or the piece that is difficult, and so you play that, but instead of avoiding that part, you play it again and again and again until you get it right. That's deliberate practice. That is improvement. You are changing the way your brain operates, and you're committing that whatever it is you're practicing to your subconscious. This is what elevates you from step 2 to 3 and 3 to 4, or stage 2 to 3, 3 to 4. The sixth step, as you trade, focus on your plan and immediate goals. Be aware of your emotional cues. Just pay attention to what you're supposed to do for the day. Don't pay attention to the guy who caught a 20-point runner and made $2,000 today. That's not going to end up in your pocketbook. It doesn't matter. Focus on what you need to focus on, your own little battle. Focus on what you need to be doing for that day. It's really important. Now, saying that you want to eliminate errors or saying that you want to hold on to winners longer is great. That's a general goal. But the general goal by itself does not include a plan. And notice I say here, focus on your plan to achieve that goal. You have to have some sort of a plan to get there. As you sporadically see positive results, and this is really important, okay, this is the part that cannot be described. When someone is performing well, this is the part that they cannot describe. As you're continuously practicing and being aware, and instead of being distracted by, a chat group or whatever, as you're practicing, what happens, in my experience, what happens over time is every now and then you have a moment of epiphany. Every now and then you have a trade that just works perfectly. You planned it, the market showed it to you, it gave you the trade, you took it at the price you said you would, you managed the trade properly, the trade gave you the heat that you expected, it ended up going to your target, it was a perfect trade. Here's the important part of that. What you want to remember about this trade is not the technical part of what happened, what price it went to, and how it turned and how much. That's not what's important when the positive result comes. What's important is to recognize how it felt. to recognize what things looked like, how things appeared, how it came together. That is a really important thing, because as an expert, that is what's going to drive your performance. It is what's called the representation of the performance, not the pieces. As I said, with a chess master playing 26 boards at the same time while blindfolded, they don't know exactly where each piece is or what each piece looks like and what it's doing. They have a general representation of what the board looks like, an overall view of what the board looks like, and are aware of all the moves they need to make in order for the board to be advantageous to them. The same thing happens in trading. This is a part that I had an incredibly hard time conveying to new traders. You want to hang on to the feeling you got when that trade performed perfectly. This is much like, let me ask everyone, those who are here still, have you ever done a sport where you execute something perfectly? You swing a club, a golf club, and it hits the ball perfectly. Or you take a jump shot in basketball and it leaves everything felt perfect. Or you kick a soccer ball and it has the right spin, the right feel, it hits its target perfectly. Even randomly, as you practice, that randomness becomes less than random. And that's really what I'm talking about here, that you want to hang on to that feeling. It is an anchor moment, as some people call it. Reward yourself along the way. This is really important. The reward part of this is really significant, because your ability to focus and your ability to maintain discipline even through the trading day is like a muscle. It gets fatigued. If you didn't sleep well, if you stayed up last night and you had some drinks and you're hungover, your ability to focus and maintain discipline is not going to be as durable as days when you're well rested and well prepared and have followed your routine and are ready to go. So it's really important to reward yourself along the way. So, you know, on a streak, make sure you go out and treat yourself to something. Make sure you take time off. Make sure you take a Friday off every once in a while. Maybe come in for non-farm payrolls and tell yourself you're going to leave at 12 o'clock, leave early that day and enjoy a longer weekend. Or just make sure that in your process that you're rewarding yourself, because if you don't, you will burn out and you will find that it's extremely difficult to follow your habit loop. Number 9, accept that all outcomes are possible. So this is a tough one for a lot of people. You may do everything that I'm saying here. You may follow everything that everybody's telling you. You may do things perfectly, but in the end, it loses. You lose. A terrible looking day could be a great day by the time it ends. You can do everything required of you to trade. You could be struggling with this for 10 years and doing everything at 150% and still lose your account and still have to go and get a job. This is possible. Accept it. Don't fight it. If you fight it, you introduce fear into the equation. Fear is a very strong emotion, and emotions are really not a great thing to have in trading. I'm going to talk about emotions in a minute. And then the last thing you want to pay attention to is minimize big changes. So you're creating habit loops, you're creating performance records, you're creating goals, you're focusing on a plan, and you're deliberately practicing. If you go and change your setup and your habits and your approach and your process continuously, what you're doing is you're generating a new habit loop and a new process every single time. And I see this, it's shocking how often I see this. I see people who are trading using fibs today, and they're excited and they can't wait to tell you how this fib worked and that fib worked, and then one day they get crushed, and then the next day they come back and they're trading with volume profile, and then they're asking 1,000 questions about volume profiling, and then the day after that they're using some sort of an indicator, and then they want to learn order flow. And that's okay in stage 1 and 2, But at some point, at the end of stage 2 into stage 3, you need to be set with what you want to do. Now, that doesn't mean that you keep doing something even though it doesn't work. What I'm saying is, once you decide on what you're going to master, stick with it. Stick with it. There are going to be times when you have a drawdown. There are going to be rough patches. You're going to take losses. The market cycle may not be in your favor. There will always be a time when the market cycle is not in your favor, because the market cycles through all kinds of processes and are favorable to you sometimes, to someone else another time. Doesn't mean you should change your plan. Emotions. This is the puppet master. Look closely at your bad habits in your day-to-day life and in your trading. Chances are you're acting on emotional triggers and cues without being aware of it. You know, you're grabbing for that third cookie, or you're reaching for that third piece of cake. What's causing that? You are wanting to get short on a trend update. You don't think it's going to go higher. What's causing that? Generally, what's causing that is not some structural thing. It's not some technical signal that your plan is generating. It is a feeling. You're behaving, acting on a feeling. Just be aware of that chimp within you, and the fact that it is like that. It's archaic. It's been there since we were monkeys, and you're not going to change it. So learn to ask yourself, especially on your blow-up days, what did I feel right before I decided to put on that stupid trade? And remember, the person you are during a trade is not the same person that you are after or before the trade. There's heavy documentation that explains that when we're under threat, our thinking process completely changes. You could be a completely different person in some respects. So once this is all done, just focus on what you felt right before, because why do you think we would want to check and figure out what we felt right before? What part of the habit loop are we trying to interrupt here? When I say, what did I feel? Absolutely. You're trying to interrupt the cue here. You're trying to figure out, your goal is to figure out what cues you, what's that thing that causes you to want to fight the market and risk 30% of your account or hang on to this terrible trade. What is that cue? You need to be, you won't be able to change it, but what you need to do is be very keenly aware of it and put a routine in place. Oh, there's the cue. Here's where I start to fight the market. I'm going to go up and refill my glass of water. Or, okay, I'm not allowed to trade for the next half hour, or something. Create a routine that interrupts that habit loop. That's one of the R's of change. You need to remind yourself, right? Controlling emotions is a myth. So those out there who tell you, I remember when I was at a prop shop, you know, one of the lead traders when I was learning would say, God dang, why can't you control yourself? You got to control your emotions. You can't control your emotions. It's a myth. Your emotions are the emotions generated by your mind. It's just a force that is much greater than your consciousness can handle. The example that I was told is your emotional mind is like an elephant. Your conscious mind is like the little man on top of the elephant. You can kind of keep it under wraps and you can kind of guide how you feel to some extent, but when the elephant starts running, chances are you're not going to be able to stop it. And so our job is to pay attention to what that is. And don't try to control emotion. Instead, be aware of them. Instead, be aware of them and know that it is okay to have those emotions. And most importantly, you don't have to act on emotions. Just because you're upset does not mean that you need to react. Trading, there's no physical threat here. You need to just understand that, okay, I'm just getting irritated. There I am, just irritated. Just saying that helps you stay conscious of what's going to happen next, causes you to interrupt things. And in general, it doesn't pay. And every time you have fought the market and it has paid off, all it's done is it created that habit loop, which eventually costs you money, big money. And finally, I just want to talk about the fact that this applies to all traders of all levels. I've seen guys who have traded for 30 years go through and make the same habit mistakes or hang on to habits that are really poor. Just because you've been doing this a while, just because you're currently making money, does not exempt you from the issues that we're discussing here when it comes to how we practice and the habits that we follow and the reactions that we have to trading. Don't make the mistake of thinking that this is all just theory and is a nice to know thing. I'm telling you from my own experience, it is not just theory. This is what I had to deal with. I was telling someone the other day that out of the funds, that the risk capital that I put up to back a trader, a good chunk of time and money is spent dealing with this very problem, changing how the person perceives the market themselves and how they're responding in their habits. It's very, very difficult to do it when the person's not on board, and it's very difficult when it's even more difficult when the person's not conscious of the fact that they need to change it. And so we spend a lot of time changing people's personalities as a part of creating traders out of non-traders. And this is why this topic is very important. If you're not looking seriously at what areas of your trading need improvement and focusing on them by creating a deliberate practice plan and a good habit loop, then you're simply wasting time or are prolonging the process. Again, if you're not looking seriously at what areas of your trading need improvement and focusing on them by creating a deliberate practice plan. This is my problem here, and I'm going to attack it, and I'm attacking it in this way. It's okay if your plan doesn't work. It just means you need to work on another plan, but at least you're focused on that aspect. That, with a good habit loop, is, according to Ericsson, is the road to mastery. Take a moment and look at what you're doing. Use the 3 R's to make change, and that's in your personal life, in your trading life, whatever it is. And ultimately, know that in the end, if you do work on who you are as a trader, not just, you know, this trading plan works, this edge doesn't, this product works, the technical side of trading, as I said, in trading techniques in the first part, it gets all of the attention, but it is not the significant part. It is not the most, it's a pillar, it's a leg in the stool that's required, but most people focus on changing their technical side because that's something that's outside of themselves. They don't want to look at changing their habits or changing who they are to learn to align themselves with the market. This is what makes this topic very boring. People don't want to know that they need to change. They want to know, what do I need to do, what do I need to click, what do I need to buy in order to make money? And that makes it very difficult. This is the unsexy part of trading, but it is the part that consumes the most energy and time and money to get people to the point where they can make money. No matter what the outcome, if you follow this process, no matter what the outcome, you'll likely find that by doing this, the results will be astounding. There will be core value changes, core personality changes, different levels of confidence. All of this stuff is really important to your development as a human being and as a trader. And remember, trading reveals all of your weaknesses in general. Trading is a very, very blunt way to learn about yourself. And that's what I wanted to cover with you today. I know it's a ton to process. Again, I suggest you view the video if you find the topic interesting. Eventually, in your journey as a trader, you will eventually get to a point where you'll see the value in looking at, you know, this topic as especially part 2 and part 3 here, the prior topic, the trader mindset and the habit loop and the trader habit aspect of it. These are going to be very, very important parts of your development. And that's it. If you have any questions, hit me up. Terry, I don't know if you're still here.
Yep.
Great.
Let's see.
Do we have any questions we want to address here?
Yeah.
Or do you want to go into the...
Let's see. We'll do the Q&A first. I'll try to keep it to 10 or 15 minutes, and then we'll do the books. All right, lots of comments. Looking for questions.
I see one at 5. They start at 5:16 maybe.
Let's see.
Eastern. Oh, that is a comment. Yeah, a lot of comments. That's good. Comments on the topic are really good.
All right, I see. Let's see. What is your opinion on income goals for the day versus not having a profit target for the day?
So, if your goal is to make that profit target and be done, I think that's fine. The problem with that is if you use a dollar-based target or a currency-based target, what that's going to entice you to do is to do what it takes to get to your profit target. In other words, you start to trade your P&L, but the market doesn't care about your P&L. I say this a lot, but the market doesn't care about your P&L. It's irrelevant what you have to make or what you've made so far. In my opinion, it's better for you to just establish what it is you plan on doing for the day. What is your trading plan for the day, and wait for the market to give you those opportunities. You know, you're looking for a breakout and a pullback on a breakout, and then you're going to enter in the direction of the breakout, something like that. That could happen, 5 times a day. It could happen 0 times a day, and therefore you will not hit your target. And if you have no setups for the day and your target's still fixed, then that's likely to cause you to take poor trades later in the day, and that's the caveat with that method. Now, if you're using a profit target for the day to say, if I make whatever 20 ticks in the S&P, even though I have setups happening after that, I am done for the day, but your focus is to stick with your setups, I think that's fine. If you're looking to build the track record and build some positive days and more confidence, that's great. I've done that in the past. The problem with telling people to watch their P&L in order to determine a target for the day is that they start to pay attention to their P&L. They start to trade their P&L, and that's never a good thing. I never have my current P&L or equity or anything on my screen. I don't like to see it. It's always closed or obscured because I want to focus on what the market is doing, not how well I'm doing versus the market.
Okay. With these daily habits, do you sleep in on the weekends, or do you keep the same? You get up at the same time regardless?
So I'm 44 years old. As you get older, you start to really, there's an alarm clock that just happens in your head that just, like if I tried, I would not be able to break my habit. I generally get up, I feel, if I sleep in on a weekend, I always feel like I wasted time sleeping. I generally get up in the morning, early enough in the morning, generally get up at almost the same time. I don't change my habits much on the weekend. I do different things, obviously, but I really don't change it. I still meditate. I still work out. I'm practicing for a half marathon that happens next month, so I'm focused on that, going out, running, and getting a better pace. And I just keep that process going. Not only because it's important for me to stay to continue to perform well, but it's something that I enjoy. I just enjoy my routine, and that's an important aspect of your habits, is to enjoy it. That's the reward part of it.
Okay. Do you meditate immediately after waking up or after exercise?
You do not want to meditate after exercising. That is not it's hard to get to the state of consciousness you're looking for when you have a higher metabolic rate. So the ideal point for meditation is after you wake up, you do your morning routine, whatever that is, your bathroom routine, whatever, and then before getting your coffee or whatever, you go back to bed or you go to a comfortable chair and you just sit down and it's just 20 minutes, and start with not 20 minutes, start with 5 minutes. Follow a very basic meditation, whether it's following your breathing or whatever. There's so much online about this. You can go to Tara Brach's website. You can go to, there's just so much out there. But spend 5 minutes on it, and what you'll find over time as this becomes a habit is that you want to be in meditation longer and longer. It's when you transcend or when you go deep in meditation, I won't get into that here, but it's an incredible experience. It's like getting a power nap, like an hour-long nap in the span of about 5 minutes, and your capacity when you come out of it, your mood, your level of energy is just so heightened that it becomes something you don't want to miss. In fact, you're just like those who exercise on a regular basis. You get grouchy when you miss your workout. The same thing what happens when you miss your meditation. Just as an idea, by the way, I want to throw this up here. This is just a very rough view of my routine. This is my habit loop on a daily basis, and it changes when it changes depending on the day, weekend, weekday, but that's basically what I'm doing. And this actually comes from a talk that I did for FuturesIO on the 29th of March called the No Nonsense Approach. And this is basically it. It's meditation, workout. I run every other day. I got to rest my legs and so on, and create your own and follow it. And you'll find that your performance, not only in trading, but your performance as a parent, as a professional in your field, as a friend, as whatever, all of these things improve across the board. That's what you're working for, not just, hey, I want more money out of my trading, but overall you're making a core change to your personality through this process.
Okay. Let's see. It says, I tend to suffer from directional bias. What would be a good exercise to remedy this?
So if by directional bias you mean that you insist that the market has to crash and that it's too expensive and that the economy is jittery and that it's bloated and it has to drop and you're a perma-bear, if that's what your issue is, then you're probably trading the wrong time frame and with the wrong amount of capital for someone who's looking at fundamental drivers in the market. So whenever I hear directional bias, it generally comes from people who are bearish in bias and are looking, watching too much CNBC, watching too much Bloomberg, and reading stuff that basically says that our national deficit is too large to be sustainable and the world's coming to an end, and put your money in gold type of thing. And then they're coming in and they're looking to trade a $10,000 account on an intraday basis. Your time frame, and I would invite you to go back to part 1 of the series, which you'll find on FuturesIO and also on my website. You've got to establish your time frame. So if you're suffering from directional bias, you've got to figure out where that comes from. Why do you have a directional bias? Why do you care? Your task here in trading, to be put simply, your task is to come in, look at what the market is doing, and align yourself with whatever that is. And the best analogy I have for that is surfing. You cannot be the surfer that wants the waves to go the opposite way, because that's where you feel you should be going. As a trader, you're a surfer that is just waiting for the waves. Sometimes they're good, sometimes they're bad, sometimes they flip you over. It's just part of the process. but you're waiting for the waves to form, and then you ride them. You go with the wave. You don't sit there and try to paddle into a wave. You don't sit there and flap your legs to make a wave, and you certainly don't sit there and tell the ocean which direction it should be going in. Your job is to just detect the wave early enough, do your part, your routine, paddle, get up on the wave, try to catch the crest, and ride it. That's our job as traders. And it's very difficult. It's a very difficult job, but it is something that can be done, and it's very rewarding when it does work. So coming in and forcing your view, directional bias is basically saying, I think things should be this way, and the market's doing something else. Tomorrow I'm going to come in and I'm going to think things should be this way again. Why? I don't know that you're big enough to sustain that. And I'm not being critical of you. I'm just being blunt, just like I would be when I'm talking to one of my traders. It just makes no sense. I would certainly not be one to back you if I find that you have a directional bias. I'm not interested in losing money. So think about a different approach. Think about the time frame you want to be trading in, and start working on a plan for that time frame using whatever skills you've already picked up.
Okay. What would you say is the max amount of time someone should spend sim trading before they go live?
So there's a point of negative returns when it comes to sim trading, and sim trading is really in line with deliberate practice. If you are sim trading and you are deliberately coming in and working using live market data or playbacks on a simulator to practice a particular thing, or to come up with statistics on your plan to make sure that you have an edge. In other words, you have a criteria, you have a mission for that simulator, then there is no limit on the time. Okay? But in general, I don't see anyone practicing for very long, maybe 6 months, a year, deliberately. Okay? And once you go live, you'll have to account for the fact that your emotions get in the way, but your practice should be committed to some automation, you know, and you just have to follow it and know that there is an edge. You've proved that to yourself. But if you're coming in and you're simulating by just buying and selling the market and seeing how you feel that morning and kind of counting the money that you made, and every once in a while throwing 100 lot on, or telling yourself you're going to trade 2 lots, but then it goes against you and you add 4 more, then you add 10 more, and then you add 50 more, and that's what you're doing, then I'll say enjoy yourself. You're not going to you're not working towards becoming a professional trader, so enjoy yourself. It's like going to Vegas and playing the nickel slot machine. You're probably not going to win a lot of money, but you're doing it for fun, and that's okay too. But you're not working towards anything, in my opinion. You're spending a lot of time, but you're doing it in an entertainment fashion, not in a professional. You don't have a professional objective, in my opinion. If you're spending 3-4 years on a simulator, eventually you're going to have to get into the market to really figure out what areas you need, what errors and weaknesses you need to work on to deliberately practice. Otherwise, you're just spending time doing something that maybe entertains you.
Okay, this will be the last question.
That's a pretty rough. That's a pretty rough answer. I know. I'm not trying to be a jackass. I'm just telling you the truth. I know that people sugarcoat stuff, and I just don't see the point to that. I'm just telling you exactly my experience.
I agree. For me personally, once I started, I went from sim to M6E, trading little bits of money just to get my feet wet, and even like $1.25 a tick, it's such a different feeling trading real money than sim money, and you can never duplicate it. It's a lot like I'm a pilot. I can fly a simulator on my computer, but you can't really simulate the feeling of sitting in a chair and your butt's vibrating and you're rolling down a runway about to take off. So
Exactly, yeah. And I really commend you for going the M6E. It's something I've tried to push in the past to all people who are moving from simulator to live, is to go to the M6E and use the 6E chart to do
exactly.
the homework, but trade the M6E. But a lot of people don't like it because they think, well, it's so expensive for the tick value, but the fact is, at least you're getting your practice, you
Yeah,
know, at least you're going out live, and the worst you'll do is you'll blow up and you lose, you know, $50 on a
exactly.
day as opposed to
Exactly.
$5,000, you know.
Yep.
So good job.
All right, this will be the last question. Can you address on how best to stay focused and concentrate while trading, and how often do you take a break during the day?
Okay, so I will start by saying there is nothing that improves your capacity to stay focused like meditation. And meditation comes in many forms, and it could be maybe you're religious and it could be a spiritual thing for you, or it could be just a you know, repeating a mantra or focusing on your breath. The ability to focus for long periods of time, and when I learned to meditate, it was astounding. The other introduce, there are only small chunks of the day where you really need to be absolutely focused. In other words, if you find yourself sitting in front of the computer and absolutely glued to the screen from 9:30 Eastern all the way to 4:15 if you're trading futures, or 4 if you're trading stocks, and you're watching every single tick, you're not doing yourself a favor, because not all times of the day are equal and create equal opportunities. You ought to focus on those times that give you the best possible opportunities. It doesn't mean that you're not in front of your computer just generally keeping tabs on the market, but you know, the first 2 hours, for example, you should be able to concentrate for 2 hours straight. After that, go hit the gym, go get your workout done at that point. If you don't want to do it, you don't want to get up early and do it in the morning. It's a great time to walk away from the market. You come back, you look at the screen, and you might do a homework study, or maybe watch the market for a little bit, but take a lot of breaks. You know, that's how you improve your concentration. This is like this is the same thing as, you know, somebody who's driving a delivery truck. You know, people who drive trucks here in the U.S. are required to stop after so many hours because physically you're incapable of staying focused for extended periods of time. And the same with trading. You know, you need to be able to, with as little emotion as possible, not unemotionally, but with as little emotion as possible, make logical decisions about what you're going to do with your money, and it's your capacity to maintain that discipline is diminished the longer you focus. It's like a muscle. It's like lifting a weight and holding it over your head. There's only so long before your hands are going to let go of the weight and it's going to hit you on the head. You need to set it down every once in a while, let your muscles rest, and pick it up again. Same concept. Your mind operates in the same way. It cannot go for very long at a high intensity. For me, the first 2 hours and the last hour and a half are key. If there's something in the middle, FOMC or something, that I'm focused during that period, but otherwise I have it open, I'm doing something else, and I keep tabs on the market. That's what I do.
Okay. Just a quick question. What was the author of the meditation book you mentioned?
So the one site that Tara Brock, here we go. So the one place that is pretty cool to learn, just for people who don't have any idea about meditation, Tara Brock breaks it down pretty into some very simple chunks. There's a very basic meditation you can get from her website. I have no affiliation with her. The meditation that I do is very expensive to learn. It's called Transcendental Meditation, tm.org. I don't think it's worth it to pay all that money to learn to meditate. There are much easier ways to do it. You can also go to a local, it's not a religion, it's not a religious process. You can go to a local, Buddhist temple or whatever and just ask someone if they can teach you to meditate. It's not a religious thing. You're just looking for a generic meditation. And then there are meditation meetups. You know, go to meetup.com and look up meditation in your area. And it's a very popular resource now. Tons and tons and tons online, YouTube and all that stuff. Okay.
All right, sounds good. All right, let's move on to the book questions.
Okay.
Okay, FT71 is going to ask the question, and then you type your answer into the answers box, and I will try to grab the first 5.
Oh, good luck with that. It's always frantic when we've done this in the past.
Yep.
All right, the first question. Are you all ready? The first question. What 3 components make up a habit loop according to Charles Duhigg in his book, The Power of Habit? What 3 components? Oh, somebody's got it already. Looks like AUH. Boom. We go with the first one, right? The first to answer?
Yeah.
Yeah, it's AUH.
Bingo.
That was quick. That was almost like preloaded.
That was really, really quick. Okay, I got you. Okay, next question.
Second question. How many hours of doing something repetitively does it take to become a master at something? Haha.
Oh,
Hang on. We got an answer right at the top. We got the correct answer right away. Looks like Jana Lee.
got it. First person out the gate.
Yeah, geez, I didn't even finish the question. That was a trick question. That was a trick question to see if you were listening. 10,000 hours is the myth, which was thrown out by the person who did the research, saying the 10,000 hour rule is not correct.
Okay.
Tell me when you're ready. Third?
I'm ready.
What are 3 of the 5 examples used during the presentation of a Keystone Habit? Give me 3 of the 5 examples.
Bam.
Looks like Colin has it. It's like they can predict the question and just copy paste.
I used to try this. I used to watch the webinars, and I could not do it fast enough. Like these guys, I have no idea how to. I know it's all in the copy and pasting, but still, how do you know which questions they're going to ask? It blows my mind. But all right, I'm ready.
I think the answer comes before I finish the question. Okay, the 4th question is, what are the 3 R's of habit change? Oh my God, it's unbelievable.
As soon as you said R, Neil Nix.
Yeah, Neil.
All right.
Yikes. Insane. Okay, last question. Why is it so important for a trader to create and follow consistent habits? Give any, I have 4 answers. You can try to hit any of them. Why is it so important for a trader to create and follow consistent habits? Actually, the first answer was correct. Unconscious trading was one of them.
And there we go, Gary.
Yep, that goes to Gary. Yeah.
Okay, guys. Thank you all for playing. I will be in contact to the 5 winners to get your contact information, and then we'll get the books sent off to you. FT, thank you today for another great webinar, part of a great series. I'm glad we're doing these.
Thanks for having me on.